What sort of interest are we seeing in oil derivatives in particular? Because it is pretty new, isn't it?
Yeah, thank you again, Stephen. It is something new that's been to the market, and really what we've done at the JSE is brought the international crude oil market to the local investor. So we're benchmarking the West Texas Intermediate, so it's the US crude oil market, and the interest in the last 3 weeks certainly has picked up phenomenal.
Why WTI and not Brent crude? Because Brent crude really is seen as a benchmark and is something South African investors would associate better with.
Great question. We have this relationship with CME Group, which is the US-based exchange, and their most liquid oil contract happens to be WTI. They also have a Brent, but not as liquid. And so really our first objective was, let's get a crude oil contract out there to the South African space. Yes, there is definitely a spread between the two markets, which in the past was fairly close, but has opened up where Brent is now trading at a premium to WTI. But really it was just because we had this existing relationship with the US exchange, and really WTI is the global benchmark, but I agree, South Africa certainly tracks the Brent market closer.
Who are some of the customers that would be buying these derivative contracts on the oil price?
To date, has been a lot of the fund managers who are looking at trying to build crude oil exposure in their portfolios. Some of them are hedging it with a listed company that's also exposed to oil markets. And then the other, which more recently is on the call options, has been a logistics company. So someone who's exposed to diesel price increases, and ultimately any influence in upward movement in crude oil prices will have an impact on diesel prices, and therefore they've decided, let's cap the maximum price or their exposure for August month.
So a call option, that's giving the logistics company the option to sell oil?
It's the option to buy oil in August.
Put would be the sell then.
Put,
okay,
yeah,
so an option to buy oil. So give us an example of a typical contract that a logistics company would want to take out on.
Okay, Stephen, the contracts we quoted and matching on is a rand equivalent. So always remember it's a rand quoted crude oil price. So the example is, let's say the logistics company saw 740 rand a barrel, as that's the cap price. They would then, or the strike price, and they paid a premium for that around 60 rand per barrel. So for 60 rand per barrel, they're capped. If the oil price goes to 800 rand a barrel, they then obviously make the difference. If the oil price goes back to 600 rand per barrel, then they still have the ability of cheaper diesel prices, and they forfeit the 60 rand premium. Really, the premium is the option insurance money.
But now they're obviously taking a view on the oil price going forward, as well as what the rand-dollar exchange rate is going to be doing going forward as well. So a bit of risk built in there.
Oh, well, you know, if you think of the local diesel price, there's always going to be that currency component. Yes, this has already got the currency risk included in it.
How about companies like Sasol, airlines as well? Would they also be looking at contracts like these?
Yeah, they've used the international markets in the past, definitely. It's just another opportunity for them. We have the liquidity of the international markets, and how do we achieve that? Local liquidities through market makers. So Nedbank, ABSA and Standard Bank are always quoting a bit off a spread there. So yes, those typical participants, plus even smaller logistic companies, could really look at this local contract for that type of price risk management.
And would you expect them to start coming to the local market once we see a market being built here?
Definitely. It's just so much easier to access. You don't need to get the Reserve Bank approval to get cash offshore to do the offshore hedging. Yeah, everything is kept with your South African broker. All money flow is always in rand. It's just a lot easier at the end of the day.
What sorts of open interest are you seeing at the moment in your contracts?
Certainly on the near dated, we're around just over the 500 barrels, and yeah, slowly but surely growing. On the options, there were around 90 contracts on those 740 calls. So one contract represents 100 barrels.
And are you looking at doing one on Brent crude as well going forward?
We're certainly investigating that opportunity. With any of our contracts, we need to find a mechanism to cash settle it against the international market. But it definitely is on the cards, and hopefully we'll be able to bring that to the South African market soon. Just
looking at some of the contracts you have in place at the moment, what are they telling you about what investors think the oil price is going to be doing going forward from here?
Again, if I understand the question correctly, is the investors here have been more speculative, but I think with the logistics companies starting to use this, you know, it's a lot easier if your competition is using the market for price risk management. That will then obviously get the other traditional hedges also considering the contract.
Further growth in commodity derivatives, what are you looking at next?
Again, it's to really cement these existing products, get the market to understand these are rand denominated, be able to, and how to access them. So it is still a big education drive. Yes, we have copper, silver, gold, platinum, all referencing the US markets, but it's again just that education, make the product understood by the investor out there.